So welcome to our second lesson of our advanced forex trading class for beginners. So today we will be looking at the components of the market structure. So we are looking at the components of the market structure. So remember, our previous lesson was on the market structure itself. So right now we are looking at the components of the market structure. There are so many components of the market structure, but then I am only going to focus on order blocks because I only want to give you what I personally think is necessary. But then as a forex student, you are allowed to research further and look for more information, but make sure that you don't get confused, because sometimes a lot of knowledge in the forex market will end up confusing you, and it will become a barrier to your profitability. Okay, so remember, in our previous lesson we said the market structure moves like this if it's a bullish structure, right? And then it moves like this if it's a bearish structure, and then it moves like this if it's sideways or in consolidation, right? So the components of the market structure, we are basically looking at the reason why the market moves the way it moves. For example, if the market starts moving from this low and then it goes up and then it comes back and then it goes up again, we need to know why it chose to come down and utilize this area as a support area before it goes back up again. It will also come back again, find support around this area, go up, come back, find support here, go up again. So we need to find the reason why it always finds support around these areas, What is it that is there that it always finds support, such that if you want to buy, you will be able to know that this is my area of buying, right? The market lives has components. These components are the ones that helps us to know and to decide and to speculate that the moment the market retraces, we already know that it's going to utilize a certain area around here as a support before it goes up, because there is a certain component around this area that the market has left, and this component is called an order block. There are so many components such as fair value gaps and mitigation blocks, but then I want to specifically focus on order blocks, right? Even in a bearish or selling market, there are also order blocks. Now, what do I mean by that? If the market is selling like this and then it retraces, it finds support here and it goes down again, retraces, finds support before it, these areas where the market finds support, there is a component around this area that the market leaves, which is called an order block, right? So right now the main purpose of this lesson is to identify order blocks in the forex market, and then your duty as a student is to practice and make sure you know how to combine these order blocks with the market structure so that when you open the forex chart, when you open your chart, you do not get confused, right? So from our definitions around here, we said order blocks, these are areas of supply and demand. These are zones where price finds support when the market is buying and resistance when selling, right? So when the market is buying like this, right, these areas are called support areas, right? But then when the market is selling, like this, these areas are called areas of resistance, because the market is resisting to go up, right? So they are called areas of resistance, right? So remember, you should always know how to combine everything at once, the buy structure and the sell structure. What do I mean by this? So let's say the market is in a bullish trend like this, it's going up, it keeps finding support at order blocks, right? Eventually the market is going to decide to want to sell. It will also which means the moment it starts selling, right, which means they will decide to break the buying structure and start selling, and then they'll start finding resistance on order blocks again. I hope I am clear. Okay, pay attention. Now let us go to a real chart and look for order blocks in the market structure. Okay, so this is our gold chart. So as you can see, our gold chart is representing a selling market structure, right? This is a sell market structure. Why am I saying so? I hope you still haven't forgotten from our previous lesson. Okay, this is the reason why I'm saying it's a sell market structure. So this structure starts from up here, right? It came down and then it went up. It found resistance. It resisted on this order block, and then it came down, it went up, it found resistance at an order block there, it came down again, it came down here, and then it went up. It found resistance on that order block, it came down, and then it went up again. It found resistance around here, it continued going down. Okay, so from this I hope we all see the market structure, right? It's evident that this is a selling market structure. Now remember, I said if it's a selling market structure, the market will break. Like for instance, it started here, right? They broke this low over here. They broke this low again. The market keeps breaking lows, and then they broke this low again over here. Now pay attention, the moment they were breaking these previous lows, they were not breaking the highs. For instance, when I'm saying they were not breaking the highs, there is this high over here, this high. The market came and found resistance here. The market didn't go up to break this high. It came down again. It broke this previous low. It came up. It found resistance on this order block. It didn't go all the way to break this high. It came down to break the previous low again, continuously going down. Okay, same applies for a bullish market structure. Okay, let's look for a bullish market structure. Here is a bullish market structure. The market, okay, the market started here. It came here, came down here, it went all the way up, came down here, like this. It kept on going higher and higher, like that, right? It kept on going higher and higher like this. I hope you see. Now, as the market was retracing, it was finding support on order blocks, right? Now let us identify order blocks. Let us now identify order blocks, right? An order block, this is the definition. Okay, let's define what an order block is. Definition of an order block. So these definitions vary. You also choose one that suits you. But what I'll make sure is that I show you what it is, and then you can then define it according to how you think you always remember. So personally, an order block is the last candlestick in a trend, or an opposing candle during a trend. Okay, so it is the last candlestick in a trend or an opposing candlestick during a trend. Okay, now let's focus on it is the last candle in a trend, right? The last candle in a trend. Let's go to a chart so that I show you what I mean by that. Now, this is a selling trend. Now, this is a selling trend, right? This one is a selling trend. So let us identify an order block, right? Let's zoom in. Now, if you check, there is the bearish candlesticks are represented in red. These red candlesticks show that the market is selling, right? And then these green candlesticks, they represent a bullish market. Now, when I say the last candle in a trend, this is what I mean. This green candle here, this one, or this one, was the last candle in a buying trend. What do I mean by that? Okay, if we look to the left, right, if we look to the left, if we look to the left here, the market was buying all the way up, which means this was a bullish trend or a buying trend, right? And these green candlestick, or lime if I should say, green candlesticks, right, they represent a bullish market or a buying market. So among these candlesticks, this green one was the last one before the market started going down, right? Which means it is an order block. Okay, pay attention there. It is an order block because it is the last candle on an uptrend. The market was going up, and then eventually at the top the market decided to come down. So the last candle that represents a bullish market, which is this green candle. Remember, these green candlesticks represent a bullish market. Every candle here that is green means the market is bullish and is going up. So on this bullish market, these candlesticks that are green represent that the market was going up. So this last green candle, okay, if you can check, there are a lot of green candles at the top. Even this one, let me highlight it. This last candle, this green one, is an order block, right? This one is an order block, this one, because it is the last candle before the market starts going down. I hope this makes sense. So this one, this green candle also is an order block, because the moment the market reached the top, it went down a bit and then it came back up. It found resistance on this order block. It didn't go all the way up to break this high, and then it came down again. It also left this green candle here, which is an order block. So if you see, the market came back to retest this order block, this last order block here, and it acted as a what? As a resistant area. Now there is this green candlestick again, which is the last candle on this small uptrend here before the market started going down, right? And then the market returned to retest this order block. It found resistance here and it continued going down. So all these last candlesticks, this last candlestick here, this one is also an order block, right? This one here is also an order block. So the market came and found resistance and it continued going down. So this is what I mean when I say the last candle on a trend. So this is the last candle on this buying trend, right? I hope this makes sense. Now let us look for another order block in a buying trend, right? So the market has been selling, right, up to this low, right? So this last candlestick here, let me zoom in. Okay. So there is this red candlestick. This is also an order block to signify that it is the end of a sell trend before the market starts going up. So this candlestick is an order block, because the moment the market came to this low, it started going up, right? And then after going up, what happened? the market returned and found support. Now if it's a buy trend, remember it's now support, it's no longer resistance, right? The market went up, it broke this high over here, it broke this high over here, and then the market returned to retest this order block. The market went up again. Now check, as the moment went up here, it left this red candlestick here, which is the last candle on this small sell trend. It left this as an order block, this one, this red candle. Now after it goes up, we expect the market to, remember I said if the market goes without you, do not rush to enter trades. The market will always return. Now we are expecting that the market should return to this order block here. This is going to act as a support, and this is where you're going to re-enter your buy trade, right? Okay, now check this out. The market returned here. This order block acted as a support, and then it went up again. The moment it acted as a support, this red candlestick, the moment the market started going up, this red candlestick instantly became an order block again. This red candlestick is another, okay, now they are candlestick like these ones, right? There is this red candlestick that is in the middle of green candlesticks. This is also an order block, right? What do I mean by that? Remember, in our definition I said it is also an opposing candle during a trend. So when I say an opposing candle, this is what I mean. This candlestick here, this is the only odd. It's a bearish candle. It's a red candle in between green candles. So it also stands as an order block. As you can see, the market came down and it used this order block as a support area before it went up. Came down, up, down, up. So I hope this is clear that the market, when the market is going up, it always finds support like this. It always finds supports on order blocks. So your duty as a trader, as a student of the market, is to make sure that you give yourself time every day, at least 1 hour, to open the charts and look for these things. Remember, I always say forex trading is one of the professions of businesses where the student can become greater than the master, because I believe that trading is an art. You tend to learn new things by just looking at the chart. If you open the chart every day just to look at how the market moves, how it functions, you might discover a lot of things, more than the ones that I've taught you, because I'm not teaching you everything here. I'm only teaching you the most important aspects according to me, of which you might discover a lot more things. You might discover your treasure as you study, right? So find time on your own and open the charts. Study these things that I'm teaching you, and then you will realize that in the process of studying and opening the chart every day, checking how the chart moves. For example, this chart was for, when was this? 25 March 2024, 26 March. So this basically happened last week. All this, okay, this happened last week. the market was buying. This is gold. Gold was gaining value. Okay, I hope you can see that this is a bullish market structure. You see how gold was moving. This is gold. It was just moving this way, right? It was just moving this way. You see the market structure for gold. It was going up. It was going up, right? So how are you going to buy so that you make money as gold is buying? How are you going to make money? It's easy, but not as easy as it looks. You are going to wait for the market to return at areas of support. This is where you're going to place your trade, at these areas of support where there are order blocks, right? Where are these areas? If you check in the chart, right, here is an order block, right? The market returned here. You could have bought. This is an area for you to buy this one. How could you have bought? Now if you stretch, there's an order block, this small order block here. You're going to buy over here. Here is another order block, small opportunity to buy over here, right? Here's another small opportunity to continue buying. There's this order block here. You could have bought here. So guys, no matter how much I may teach you, if you do not practice, this will never make sense. This makes sense the more you open your chart and look for these things that I'm teaching you, right? It will make sense, right? Now, this is one component of the market structure. So if you have any questions, feel free to drop them in the comment section. I'll go through the comments and I'll also see how best I can try to deliver these things to you so that you can understand. Thank you guys. See you on the next lesson. Cheers.